Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, June 4th. Going to be going over the usual tickers, including the volatility index, S&P 500, as well as Bitcoin and Ethereum. But then I'm also going to get into some fun tickers, really just kind of thinking about trimming out of positions. That is kind of the theme of this video, really just recognizing some downside risk. And so those tickers are going to be Oklo, GameStop or GME, Webull, which is bull, Neo, as well as ChargePoint. And the last two are pretty interesting because Neo reported earnings yesterday. ChargePoint reports earnings today after the close. So it will be interesting to kind of maybe compare and contrast those charts, think about them looking forward. But anyways, let's get into the usual tickers here. Going to be beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on Tuesday, June 3rd at a price of $27.39, down nearly 4% on the day. But then now in the pre-market, coming down about 0.3% more, down to around $27.32. Could be retesting $27, which I do have this alert here. Maybe it has hit that level in the pre-market or overnight. We will have to check. Yeah, I personally am waiting for it to come down to 25 because it is overall trading back in this downtrending channel, this parallel channel here highlighted in light blue based on these three pivot points, right? They're going back to the highs from September 6th, which was the high after hitting this, blow off top here on August 5th. Then we started to form this channel. So we are back in that channel. The upside will be bringing price to around 30. It looks like 33, $35 now, I guess I should say, being the top of that channel. We do have this gap to the upside that has yet to be filled at around $38. But the VIX, which is the market volatility index, the gap that corresponds with the closing date of May 9th, that gap has already been filled, so maybe this is kind of like false hope there. But, I do think that the UVIX is a good one to hold just because we've been in, a volatile market, but maybe it is heading lower down to 25 and perhaps beyond. Getting to the bottom of that parallel channel would be notably lower, could be heading back into the 10s. It looks like where the cursor is, that's around 15. So there's definitely a lot of downside potential with it, so risky in that sense. But if we do look at this parallel channel, accumulating the UVIX at any time in this parallel channel would have resulted into some gains over here when we did hit highs on April 8th, corresponding with volatility around the Liberation Day and tariffs, all of that. And if we do take a measurement from the very top here on September 6th, goes for about 214 days. That is more than 50% move to the upside. So when we're back in the channel, I think that there's just, more opportunity, more time to be accumulating before the next move higher. So yeah, I am not really, getting too nervous about this if it does come down to 25. I will be happy about that, as the recent lows that we've seen were hit on May 13th at 26.23, did not come down to 25, and actually have never been down to 25 as far as I can tell. It looks like the low over here on February 20th was at 25.85. So yeah, maybe we break that level and head down to 25. We will have to see. But now let's flip over to the 10-minute time frame here just to get a more zoomed in perspective on the chart. And so from yesterday's pre-market prep, it does look like the UVIX was selling off, leading up into open when it did continue to sell off, bouncing from a low of 27.18 and then closing on the day a little bit higher, holding that level into the after hours, but losing it in the overnight trading, coming down to a low of 27.05 just as the pre-market trading started. And so that so far it looks like it's the low 27.05. And then just looking back over at the daily, just kind of want to look at the volume here. So what do we see with this? So this actually doesn't make me feel so confident. It's not a huge difference, but we do have increasing volume over here, which does make me think that this could be a distribution, that we do end up breaking below 25. But for me, that would be just a nice time to accumulate some more shares to hedge for when the market does pull back, the volatility spikes up. Nice to take some profits and then roll those into some discount buying opportunities in the stocks that are down. Right now, we're not seeing that though, and this could continue to go lower. And now let's just flip over to the VIX, which is the market volatility index. Closed yesterday at 1769, so this is trading below $20 a share. I've got this alert right here, and it was down about 3.65% yesterday. Pretty similar to the downside move on the UVIX, which was just shy of 4%, so 3.65% down. Not so terrible. But this did close below 18. I've kind of talked about that level. Corresponding with the 786 here at 1791. That is this retracement here, kind of looking like maybe a head and shoulders pattern. And that level has been tested multiple times right around 18. So maybe we are going to be getting rejected from that, or breaking through that level, I should say. And then I just, out of curiosity, I don't know that this is going to lead to anything, but I'm just going to draw a ray here going from this low at 1474 and then the low over here from March 26th. Just curious to see, so I was kind of hoping that that would correspond with we're trading above that now, but it does look like we are trading below that level. So this looks like that level that was, this prior support, higher lows being formed, we're still forming higher lows. So I think that's a good sign. But looking at that trend line there, we are trading below it, did get rejected from it multiple times. And it does look like this downside move following that consolidation does seem like it could be a bear flag, which could be sending the volatility much lower, maybe heading down towards around 15, marked by this line here at 1485. But maybe not. Maybe we do continue to hold higher lows. So the low over here was 1697. The low over here, 1715. So, we're testing those levels in the sub 18 into the 17s. So maybe there's a little bit of risk there, a little bit of concern. Actually, maybe what I want to do is probably, I'm just to clear up some of the chart here so it's not so cluttered. And actually, what do I have there? I'm just going to delete that. Actually, maybe do I want to? Just don't want to have so much clutter down below. And so what I want to do is just connect a line from the low here to the lows over here. And I'm actually just going to do a trend line and maybe, I just want to delete a lot of these levels, but I don't want to delete that 786 there. But let's see. I'm just going to go to the trend line tool, just going from the lows over here, just being kind of casual. We can see that did intersect. Basically, with the close over here on the 16th, I could probably make that line a little bit here. I'm just going to zoom in over here so I can adjust that to be right around that close, 17. Let's see, 24 was the close on May 16th. We're still above that trend line, so maybe there's a little bit more downside. But if we go lower than 17.15, I guess that would be a little bit of a concern. And that trend line here corresponds with that low, not the open. So, I guess maybe I'll put an alert at 17. Actually, do I have an alert at 17? I should just put an alert at 17. So let's see, below $17 right there. And this alert, 65, I guess I'll leave that up. There's still no harm in it. So we'll see if we do head lower, if we do put in a lower low relative to the low hit on May 16th. And then below that, then 17 would be 1697 is the low over here. But anyways, I think that's enough rambling on about the VIX and the potential downside for this, which would actually correspond with upside potential for the S&P 500. So here we are looking at the SPY, or the SPY, which is the S&P 500 tracking ETF, which closed at a price of $596.09, up just over 0.5% on the day, nearly 0.6%, hitting a high on the day of $597.08. Maybe we're putting in a double top here, so good to be cautious about that. But we could also be breaking out to new highs here, considering this range. But that would not be all-time highs, which would need to be getting up to around 612. So the all-time high so far is 611.39. I think that we could be seeing that level hit next week, but this week I think that we need to be taking out 600 first. And, I do think we are well on our way to doing that. But if we do look at the, higher high that we've put in, how does that correspond with the RSI? We actually do see a lower high in the RSI. So that would be bearish divergence, putting in a higher high here, lower high here. However, what we could see is the price of the SPY continue to go up, and then that could be bringing the RSI with it, getting to a higher high than over here, which was at 69.58. So if we get into the 70s, then that would, cancel out. That would negate that bearish divergence, because we would no longer have divergence, higher highs in the RSI and in the ETF price. So then we could just be seeing this going higher. Because really what we need to see is this being formed as a top. Right now we don't see that. SPY could keep going up, this could keep going up, and then that gets negated. And looking at the highs here, we do have, let's see, a little bit lower volume than we saw over here, but it's all, fairly similar. It's kind of like hand wavy. Not really much of a difference. So kind of tough to say there. But yeah, to the upside, I'd like to see it closing above 600. To the downside, it looks like 590, an important level here. Really just kind of like the consolidation levels, kind of like the average that we've been trading in the past few weeks, maybe coming down to around 580. That does seem like kind of the consolidation lows. Did get one close below that level on May 23rd, but otherwise we have been closing above 581.68, that red line there. And actually the close on the 23rd was, yes, below 580. That was at 579.11. So maybe that was, a very nice dip buying discount opportunity. But if we do go lower, I've talked about this many times, around $570 could be hit. And then just to point out where that red trend line comes from, it's kind of like the consolidation lows over here, representing a nice dip buying opportunity for some swings before ultimately breaking lower, but not retesting that red line, actually retesting this purple downtrend, which was, it looks like, the neckline of his head and shoulders pattern. And we did get a move, a measured move to the downside over here, but then we did go beyond that, corresponding with Liberation Day. But now let's just flip over to the 10-minute time frame to look at where this was trading at yesterday from the pre-market when I did the last pre-market prep. So it looks like the low during pre-market yesterday was hit at $589.01, testing that yellow line there at 589.28. Then just floating up into the pre-market, into market hours, but then hitting a top of 597.08 before pulling back a little bit, getting rejection from that level, but then holding the majority of the gains from the day into the after hours, and then pre-market getting a little bit of a pullback, but then ultimately going up higher in the pre-market, hitting a high of 597.67, but then pulling back pretty dramatically, really over the past like 20 to 30 minutes. we can see that, we got these big red candles coming down to a low of 595.47. So it looks pretty dramatic, but it's still holding up pretty good, still well above 590. But yeah, now looking at this on the daily, let's flip over to the SPX just to get some more precise levels on the S&P 500, because the SPX is the S&P 500 index, which closed at a price of $5,970.37, up about 0.58% versus the SPY, which was up 0.57%. But yeah, looking at the SPX, just like the SPY, looking like we could be heading towards, for the SPY 600, for the SPX, right around $6,000. So it looks like I do have an alert there at 6,000. So we'll see if we get above that level. I'd like to see a close above it this week before next week, potentially, we make a move to take out these all-time highs at $6,147.43. So we will see. Maybe we could get up to around 6,200 next week. That would be really nice. But maybe we don't take out those highs. Maybe I'm getting ahead of myself and we do start to pull back. Levels, really just adding a zero to everything I talked about with the SPY. Here, got this red line right around $5,865. The lows over here right around 5,800. And then 5,700 corresponding with that purple neckline. The green line here is the 236 retracement, but I'd actually have to redraw that at this point. I'm not going to do it in today's stream, but I would have to adjust that to the highs that we hit yesterday. Maybe we take out those highs today, so I would just, continually be having to draw that. We did get an approximate, pullback, notably above, but, a pullback to close to that level, hitting a low on the 23rd of 5,767. So, in the $5,700 range, which corresponds with that 236. But yeah, anyways, now that I've gone over the VIX and the SPY, let's flip over to Bitcoin. But I am actually not going to be looking at the chart over here. I just find it to be a little bit more valuable to be looking at the chart here in TradingView. And so what we can see, and what I am expecting, or rather, what I'm hoping, is that we do see a pullback in Bitcoin, maybe coming down to, sub 100,000, giving us one last opportunity to buy below that key level. But maybe we don't do that. I do have this purple line drawn here at around $102,000, corresponding with the wick lows over here. Maybe I could actually move that up a little bit higher to around 102,700, somewhere around there, just getting a little bit more of that wicks testing that level over here. Consolidation lows, that could be acting as some notable support. If everybody's starting to get long with this, or maybe people do start to get bearish because we see, head and shoulders pattern playing out, maybe we do breakdown, everybody turns bearish, pointing out this head and shoulders pattern, but then, those bears get faked out and we do break out to new all-time highs. So yeah, I long Bitcoin the rest of the year, currently trading sub $105,000 here. And let's see. Looking at the consolidation here, we do have a downside move consolidation. So that's a potential bear flag, which could be suggesting, further downside. And if I do draw a Fibonacci extension, let's just see over here, we can go from the all-time highs, I believe that was the all-time highs, to the lows here, and then up to, the highs there. That will be suggesting price coming down to around $98,000. So we will have to see. It does seem like a confluence of levels with this Fibonacci retracement, which is going from the lows hit here on April 7th up to the highs hit on May 23rd. We do have the, let's see, that is the 382 at around $98,000. So we'll have to see if we do pull back, get a test of that before going higher. And so I am hoping that we hit 102, maybe 98, if not, right around 100,000. But I think that a lot of people are, kind of expecting or hoping, a pullback to around 100,000 before a bounce to really load the boats one last time before taking off to 100,000+, putting in new all-time highs. But yeah, and then let's move on to Ethereum here. Also going over it in TradingView, as I do go over these during Crypto Corner Sat Stacker. Every Saturday, put out a video going over 18 different cryptocurrencies, including Bitcoin and Ethereum. And so for Ethereum, we do have this sideways consolidation over here. I could actually kind of extend this range over here and yeah, just kind of consolidating in that range. But I mean, do I really see that range as adding that much value? A little bit. I'll just leave it up there. But really like the lows for that consolidation, this line here, right around $24.75, so $2,475. Currently trading above that and actually trading above the midpoint of that parallel channel. And so current price is just above $2,600, right around $2,623. But we are putting in, lower highs. So far, we were putting in higher highs. And maybe that's actually a good thing because we were putting in some higher highs here with lower highs in the RSI, which is bearish divergence. So getting a little bit of a cool off and also just boring people out of their minds with Ethereum, I think that's a really good thing. And, I think that we could be seeing a dip, a test of around this yellow line here I've got marked at $2,323, so 2323, corresponding with the low from May 18th. I think that would be an excellent dip buying opportunity, really in the range from around 2,400 down to 2,350. I'm hoping we get a dip down to that level before we start to head higher. I could see this heading up towards, right around, let's see, $8,000 by the end of this year. So that is what I am hoping for, but we're just going to have to wait and see what happens with the price of ETH. But with that being said, having gone over some crypto, let's flip back over to these stocks. And so the first one that I wanted to go over, maybe this is something that I am going to have to come to terms with. I have one share of Oklo, which is ticker symbol OKLO, which is a nuclear company based in, I believe, California. And there's something that's been pointed out that also highlighted something that I recognized, which is maybe there is some bearish divergence going on. And so first, though, I should note that Oklo closed at a price of $49.77, down over 5% yesterday on Tuesday, June 3rd. Pretty massive red candle here, bearish engulfing, completely engulfing all of the trading that occurred on Monday at the start of the week. And another thing that happened is we put in a higher high. So maybe you'd think that's a good sign, hitting that high of $58.69. But if you look at the RSI, we actually see a lower high. And actually, yesterday's high in the stock price, didn't correspond with the high in the RSI. So there's some divergence there. It looks like bearish divergence with a bearish engulfing candle. That could be not looking so good. And actually, that bearish engulfing candle, this move to the downside, was pointed out by Colin Gladman on X. So I might just pull up, his post. So let's see. I'm just going to search Colin Gladman over here. And then I'm going to search his page for Oklo, just so we can get that latest tweet. So he posted that 16 hours ago. And so what we can see is about as ugly a daily candle as they get a close below yesterday's candle today. So he wrote this yesterday. And this could see a solid retrace. And so what he has is the low over here around, let's see, 49.45. This does look pretty bearish. Could be heading down to around 45, maybe 41, 42. We do have a gap over here around 40 that has not yet been filled. So maybe we could be seeing a retrace down to that level. And so what I've done, I've talked about, the stock price potentially finding some support around 48. I do have an alert there. And that orange line, let's see, what does that correspond with? That corresponds with the open price from February 12th, a little bit arbitrary there. But, that was support here before bounce and then pullback, massive retrace. And so over here, maybe 48 acts as support, maybe it doesn't. And so what I have done with my one little share that I have left is I've placed a stop loss just to be managing risk, kind of in the theme of trimming out. I would like to see this go up to, and I actually do believe I adjusted my limit sell yesterday. That was at, I believe, 60 something. I wanted to get it at a high, but then I recognized, hey, maybe this is a cup. Maybe we're starting to form a handle, and that would suggest further upside. So getting up to around 70 does seem feasible. That would be putting in a new all-time high. So I think I actually had a limit sell at 69, but then seeing Colin's post, recognizing that we do see higher highs here. And then actually, if we look at the longer term time frame, we do see a higher high over here. So the highest that we've seen was $59.14. So we've actually put in a lower high over here, but the RSI is higher. So that's actually hidden bearish divergence, where you have a lower high in the stock price, higher high in the RSI. That's opposite what you get for bearish divergence. So that's why it's hidden bearish divergence. But this is just saying that, the RSI, the relative strength, it is, looking strong, but it is overbought in that sense, but price is not getting higher. So that does suggest that there's not as much, strength in this relative to where price is going. So that is hidden. But it is definitely a sign there that maybe we're not going up to the 70s. So I did adjust that limit sell from 69 to be a stop loss just below 48. I can just pull it up on my phone so I can, if you're curious about the number, but I suspect this will get swept and then I'll be sad. But my stop loss for my one share is, okay, yeah, I was confused. I was looking at my position, is just below 47. My stop loss is at 46.79. Just one share. Like I said, I believe if that does get filled, that would be a 70% profit for me. I do have an average further down here. But highlighting this level here, we do have a gap that has yet to be filled at 32.03. So maybe we could be going down to that level, but I'm actually going to make that line a little bit thinner. And since we did, fill this gap over here, I might actually delete that level, or maybe I will just, I don't want to add text. I might just make that thin, but then make it purple, because that does seem like, hey, maybe there's a little bit of a, cup type form there, getting above that level, looking good. But maybe we do pull back to a gap, and that would be the gap that was formed following the trading of May 22nd. So on that day, we did close at a price of $39.72. So I'm just going to put a horizontal line there, make that dash so we know it's a gap that has yet to be filled. So yeah, if I do trim out at, right around $47, then I could potentially buy back at around 40, maybe when we're finding support at this uptrend, which, let's see, what does that correspond with? Yeah, that corresponds with the lows over here from September of last year. Pretty insane. Was trading at around $5.35 was the low on September 9th. Did get, appears of that level over here, but it seems like it was kind of a fake out before on December 16th, retesting that downtrend. Now trading, or over here trading below it, kind of forming this bear flag before breaking down lower. Maybe we come back to retest that level. Confluence of levels with that gap fill around 40. Also 40 being kind of a psychological level. And this consolidation over here could be acting as some notable support. So I have that stop loss. I'll be sad to sell at 47, but that's better than just holding until 40, and then I'd be more inclined to buy back at 40. And so I do think that's interesting, but I need to be managing risk because there are some signs that suggest this could be bearish, but I don't want to be selling right away. I'll let the stop loss fill if it's going to be filled, or not if it's not, and I'll be happy if it doesn't. But yeah, the next ticker on the list is going to be GameStop. I wanted to point this out because there have actually been a couple posts on, looking at this, maybe this is a bear flag, downside move, consolidation. There's not much volume over here, so that does suggest that there could be a continuation to the downside. And I believe Colin also posted this, on the 4-hour time frame, though. But with this being kind of a wedge pattern here, and that potentially be suggesting further downside. Since I do have it over here, what I might do is just type in GameStop over there. The latest, so he did post this. This is a rising wedge. Oh, it's actually on the 1 hour. He says, "Don't shoot the messenger." I actually replied to that, and I said, "Thank you, messenger." He did not like it, though. I was sad about that. But yeah, he says, "Don't shoot the messenger." This is on the 1 hour time frame, so short time frame, shorter than the 4-hour time frame. So yeah, I mean, he sees this as, let's see, just make sure I get that right. Yeah, so we got this bounce here, a pullback, and then we've got this uptrend here that would be acting as resistance. I'm not going to draw it because then it pulls up all of my other drawings. And then from this downside, we've got an uptrend here. It does look like we broke that. And so that could be going lower. His next image is, the rising wedge, suggesting that this price is going to be going lower. And then, kind of makes me think that it's going to happen is, post something bearish about GameStop or anything, and people get really upset about it. So put this on, and the burn should go away the next 1 to 2 years, waiting on that MOAS. So yeah, I mean, good to just be keeping that in mind. It's all about managing risk and just be prepared for further downside. I also did see another post from Volatility. Maybe I want to pull up what he posted. And so let's see, Volatility, Talati, Tapan. Not sure if I'm pronouncing his name right, but just gonna type in GameStop here so we can see what he was saying about that. So the latest post that he has was from 11 hours ago. Looking at the 4-hour chart, he says hitting the OB order by OB. I don't know what that means. Sorry. On balance, I'm not sure. Zone. Sorry, on the book, I don't know. And it looks like a rising wedge broke to the downside, what Colin was talking about. Eyeing for 29 to 29.30 zone for a bounce. So, maybe that's a dip buying opportunity, so good to keep that in mind. He does have some risk management here with a stop loss below 27. And so if 29 is supported, then price target 1 would be 35, 2 would be 37.50. So, do keep that in mind. If we do pull back, bounce, then we could be going higher. And then the other image that he had here was, potential breakdown to, stop loss below this level here at 27. So, yeah, I mean, I have actually been thinking that this seems really bullish. That's why I have this doodle here that we could be seeing a pullback to around 29, 28, and then going higher. So maybe what Colin and what Volatility are talking about is going to happen, that we will be seeing a pullback, but that just acts as a dip buying opportunity before we start to rally. And the reason why I'm a little leaning more bullish and thinking that the pullbacks will be short term is because if we do look at some contracts over here, or really just the net call and put premium for GameStop, doesn't look so great. Yesterday, we do see net call premium down almost $3 million yesterday, whereas net put premium was down more than $5 million. So that's net bullish, but kind of, selling of calls and puts, not really too great. But if we look back over the past 7 days, we do see, actually, let's just do the past 3 days, or maybe even just the past 2 days here, we can see that 2 days ago on Monday, we saw net call premium being more or less flat, green line here, but up $2 million, almost $2 million, whereas net put premium on Monday, was down almost $21 million. So that red line here, that suggests selling of puts. So that suggests that bottom could be forming. And actually, if I do go back the past 14 days, the last time we saw the red line coming down over here, almost $25 million negative, so selling a lot of puts, we did see the stock price move higher. That's in yellow there, so maybe that is to come with GameStop in the short term or the longer term after a little bit of a pullback. So good to keep in mind. Be patient. And then talking about being patient, let's flip over to Webull, ticker symbol BULL. This did come down to my level at $11.10. And so I did have an order placed there. I did add to my position. I now have a larger position than I was initially hoping to have, but that's because I trimmed out on a pullback here, but then I decided to buy back in. And so I had what is effectively a full position, and now I have like a 1.5 times sized position, but that's fine. I do think that this green line right around 11.10 could be holding as support. We did close below it though yesterday, closing at a price of $10.95, being down 4.28% on the day. But just to bring it back to why I have that level highlighted here is just really like the consolidation lows over here. We did hit a low over here on April 8th of $10.39, but we did go lower than that at $9.54 on April 11th. And so, I do think that, with all of these wicks testing that green line at, like I said, $11.10, they could be acting as some notable support, because the last time we were testing it, over the course of the span of more than a week, we did get this nasty wick below it down to sub $10, $9.54. Right after that, we got a massive move to the upside. So I do think that Webull is now in a great discount buying opportunity zone, but maybe not. There's not much history on the chart, so maybe it does fade lower. And something that, I think is kind of like reverse psychology about the market, another post I am going to pull up, but this time from Mr. Chart Norris. So if I do pull back over here to Mr. Chart Norris, and I can just pull up what am I thinking about? I'm talking about Webull. So if I just pull up, search that, his latest post was, from 1 hour ago. This is the 4-hour candle chart. And let's see, this is on the 4-hour time frame. And so we got this little bull here, rejection from that downtrend, pullback, break above, and then retest. And so, maybe we start to see, this is the 4-hour chart. So maybe over the course of the next day or two, we start to see this rallying higher to, maybe around $14 would be the top over here. But he also, had another post. This is a reply. It has nothing to do with bull. I'm not sure what he's talking about there. And so is this for bull? Am I cooked? No, I don't get why he would think that. But he has, let's see, short dated calls. And it has nothing to do with bull is what he's saying. But this guy's post is actually something that Mr. Chart Norris has talked about. He's saying, open your bags over here. Maybe it was a reply. He posted something. It was a screenshot of, he posted something. Let's see. I thought he sometimes posts some controversial stuff. So good to be cautious with that. But yeah, triggered. Finally, Mr. Chart Norris posted this about an hour ago. So this guy, elite options trader, bought 10,000 shares of bull at $13.85. Target, targets being high up there, stop loss at 11. So he's saying triggered finally. So basically when people get over leveraged, people get overly confident, they tend to be on the wrong side of the trade. So this guy did get stopped out with the price going below 11. And so with people getting over leveraged, going overly long, this is a good sign when they get stopped out. Just like, that guy who, let's see, I'm just going to search again. Bull, just like that guy who has short dated, calls. He's saying it has nothing to do with bull. But this guy, because Mr. Chart Norris is saying the left side played out perfectly. What about the right side? And so this is suggesting, that, so this guy has options, calls that, $12, 12.50. And these are all short dated, so they expire, not this Friday, but next Friday and the Fridays after. And playing options. And to be honest, the data on Webull, the options data has not been looking good. We see net put premium increasing. We can see that, really, I'll just expand this. We can see it across the board. Past 30 days, let's just go all the way. It's just been like noisy ups and downs. Really, we see a lot of red lines going up. That's the buying of puts. Green lines going down. That's the selling of calls. So really, there's nothing that stands out to me as this being bullish. And if anything, I would say it's more bearish. So I don't think it's good to be playing options with Webull right now, especially because the chart is so young. So I'm only doing shares with it, but you do you. That guy seems, some people seem like they're a little bit overly bullish with bull. But anyways, let's talk about some earnings stuff. So NIO did report earnings yesterday. I'm not going to get into the details of it because personally, I just don't really care that much. I like to focus on charts more than, the nitty gritties of the business. But what we can see is that NIO did go up yesterday following earnings, which were reported during the pre-market yesterday. It looks like, NIO price target lowered to 350 from 4. Price target lowered. But they do have a positive outlook, it looks like. So buy rating backed recovery margins. Let's see. Maybe if I switch over to the 1 hour time frame, maybe we could pull up some news from that. But no, I'm not going to get into the nitty gritty, like I said. But what we can see is this nice green candle closed at 353, up 0.28%. So green on the day relative to the previous day's close. So that closed on Monday before earnings were reported. And, we did pull back to this alert. Not sure why I have it at 336 because I do have, let's close that. Because I do have this level at like 332, that is a 786 Fibonacci retracement. And so that's going from, let's see, the low over here at 302 up to the high that was hit here at 444. So just going to make sure those levels are marked correctly, 444, 302. And so that 786 is at 332.4. We did pull back and nearly get to that level. Hit a low yesterday during market hours of 335. But if we do look over at the 10-minute time frame, we can see, maybe this is some data on the earnings, but we did see a test of 332. I had an order placed there that got filled, so I bought the dip. Maybe could have been more aggressive seeing this nice bounce, but I was more aggressive than just 1 or 2 shares, so feel good about that. I got 10, nothing too crazy. But yeah, there's this little news event here. It looks like NIO unlikely to break even until 2027. So cautious about that longer time frame, but also with this being a Chinese stock and stuff, I have not been too happy with its performance. But looking at the chart, we did get a retrace to the 786. Looks like we're getting a bounce, increased volume there. So maybe this is looking good. Higher lows. I have no idea. I don't think this is going to be hitting $8 by the end of the month, by the 20th when options expire. So that sucks because I do have an $8 strike call that's going to be going to zero. But that's fine. That's part of trading. Got to manage that risk and recognize when things are going down. And NIO has not been a great performer, but maybe the bottom is in for the near term. Maybe we get up to fill these gaps here around 471 or 517. So let's keep that in mind. But then now finally going to be going over ChargePoint. They do report earnings this evening, which is why I have this green line marked here, corresponding with their earnings after the close. But there are some things I wanted to talk about that I think are good to keep in mind. I do have a lot of levels marked over here. which I don't necessarily find to be that helpful. So I am going to flip over to let's see, TradingView to pull up the charge point chart here, because I have been learning more about, let's see, Wyckoff analysis. And so I want to talk about that a little bit here, just to give some perspective on the range that we have been trading in. I'm actually just going to try to zoom in on this, but I don't want the volume intersecting with the candles there. So what we can see here, I understand this to be as, if this is to be either accumulation or distribution, I would argue that looks more like accumulation because we have higher volume over here, lower volume over here. So that makes me think, like I said, this could be accumulation. And so with that being said, I'm just going to throw up some labels on this. I know we are on the hour, so this is running a little bit long, but I just kind of want to mark some of the levels here. So right here, I would understand this to be, like preliminary support. And I'm just going to adjust the colors here. And let's see, got that right here. I believe that would be preliminary support. I am still very new to Wyckoff analysis. So the reason why I would say that's preliminary support is because it looks like we have the selling climax over here when we put in that low. And so I'm just going to label that as the selling climax there. And let's see if I can just move that to right there. And so from that would suggest to me that we have the automatic rally, which actually wasn't that strong. So maybe this is not a valid level here. And maybe I'd want to actually draw that over to here. So maybe I'll just move that kind of in between those two lows. But then following that, we would have the automatic rally bringing price up to here. And so that would really define the range that we'd be trading in. So I have this parallel channel here, this parallel lines suggesting the lows over here. Anytime we get to that level, be a dip buying opportunity. Anytime we get up to the highs here, that would be, a level to trim at. But noticing that the high was up here, not down here, what we might want to do is just move this up to be corresponding with that automatic rally level, and then coming back down over here to the lows hit on March 31st. That would be like the secondary test. All right, because we have pulled back to that level. We got a nice bounce, but it didn't bring us all the way back up to the top. So not really looking like that great of a range. We did break below that test level, which maybe could be a spring, but really I don't think that we've traded in this range long enough for that to be really that significant. But I will note it over here. Maybe that is the spring. But I kind of doubt it, to be honest, just because we haven't really been trading in this range for very long. But then that would be a break above and retest. So, I think that looks good. Moving up to the midpoint, getting rejected again, pulling back, retesting, higher low, and then continuing higher. But then I have all of these levels over here, or these doodles, I should say. I do have this downtrending orange line, which looks like we broke out from, retested, and moved higher. So that looks good. But generally, I'd have to say I'm a little bit concerned about what's going on here with earnings coming up, because we haven't really gotten above the highs here from March 7th, which the high for that day was 79.82 cents. We did get pretty close to it a couple days ago and yesterday. So on May 29th, we hit a high of 79 cents. We did wick higher than that yesterday on the 3rd, hitting a high of 79.8 cents, but still not getting a close above that level. And really, that was a level that we got rejected from And so this automatic rally level, what did I say, 79.82. So we haven't been able to get above that. So 79.80 yesterday was the high. So yeah, that makes me a little bit concerned. We do have increasing volume here. Initially, when I saw this big move up, there wasn't much volume behind it because it was earlier in the trading day, but still seeing a big move up and not much volume behind it, that makes me think it's not really that strong of a move. There's not the amount of effort doesn't back the move. So it means small money is going into it. But then what we see is volume did increase to, be elevated like it was over here. So that does make me think this is good. But if the majority of that move was carried out with lower volume and then the rest of the volume came in just by holding it up there, that makes me think it's actually not really that strong of a move. If you have a lot of volume moving it higher and then not much volume keeping it up at that level, that would suggest a continuation. So we don't actually see that. If I do flip over to the shorter time frame, so let's see, I might actually do the 1 hour time frame. I might add that to my favorites. And so what we have is, big upside move and, consolidation. So we do actually, so this makes me feel a little bit better about it. Increasing volume on the upside and then lower volume maintaining that level. So this does look like a bull flag. So maybe it could be going higher, maybe it could be going higher corresponding with earnings. But just like, with what I was talking about with NEO, we saw a pullback into earnings, but then the move following earnings was green going to the upside. So that looks good in that sense. Whereas with ChargePoint, what we're seeing is some rallies prior to earnings. And so I think this could actually be retail anticipating good moves following, but they're just not being that money. So let's see, that much money behind it. So the volume traded yesterday volume was about 25 million shares traded. And with the average price being around 77 cents, let's just pull up the calculator app so we can do some math here. So 25 and then 25 million times 77 cents. That represents less than $20,000. So maybe that seems like a lot of money. That's really not a lot of money. Big money is not betting on ChargePoint. This is all going to be retail, in my view. And I think that, with this range that I'm talking about, I don't really think this is the spring, but at the same time, I haven't gotten to, in my readings on Wyckoff analysis, I haven't gotten to the spring portion. I've really just gotten up to, I think the secondary test is the next part of the reading that I'll be getting to. So I'm not really sure, but I just think that with the big move, going up yesterday over 12% on the day, could be a little bit risky going into earnings. So I think it's good to manage expectations that maybe this goes higher, maybe it doesn't. And I think that we could be seeing a potential rally, though, up to around $1. If that happens, though, I think that's a good level to trim at or maybe buy some puts to hedge because I think that there's going to be a reverse split really like within the next month and a half. I think that they will be carrying out a reverse split to regain compliance. So if this does go up to 1, I think it's a good level to be taking some precautionary measures at, but maybe that doesn't happen. Maybe it does pull back. This red line that I have here, that didn't play out, so I'm going to delete it. This yellow one effectively has. We'll see if the green one does. I don't really know, but I think it's good to be managing risk, especially with coming back to the chart over here. We have this green vertical line corresponding with earnings. We have this red line over here corresponding with August 19th. And so that is when they need to be regaining compliance. So that means in order to regain compliance, they have to be closing above $1 a share for 30 consecutive days, 3 times 10 days. And so that's really like 6 weeks. And so we haven't seen, or actually maybe it's, I'm not sure if it's calendar days or business days, but if we are to consider that and then go back in time from that date, 30 days. So I'll do 30 calendar days. I don't know why this jumps to, got 29 days back and then it goes to 32. Not really sure why. Maybe because of Juneteenth around there, the 19th, 20th. I'm not sure. So let's see, going back right around, or so that was, I'm thinking of the wrong month. That's July. So I'm not sure why there would be a gap in the data here. And so let's see, around the 20th, 21st, I might want to put, a yellow vertical line there. And that would correspond with, I'm just going to do it with, let's see, can I do the 18th? So that's a little bit before. So the 21st, make that a thick line, make that yellow. We basically have to be closing above $1 a share by July 21st. If we're not going to regain compliance by August 19th, and then we'll potentially be delisted. And by I'm not currently holding any charge point, don't have any contracts. If it does go up to $1 a share, though, I would definitely consider buying some puts that would be expiring around August. But yeah, I mean, that's really just kind of like my thought process on that. I think it's risky. Earnings, doesn't matter what the stock is, doesn't matter what your sentiment is about a stock. Earnings are unpredictable. And so I think that this maybe could be moving up to 1, but then that's a rug pull level, exit liquidity, and this pulls back before a reverse split announcement. So that could be a nice way to hedge if it does go up there. Right now, could go up, could go down. I don't know. So that's why I'm on the sidelines with it. But with that being said, I'm 11 minutes over the hour. I'll just pull up the chat in case there were some requests. Charge point earnings. Yep, did just go over the chart. So hopefully my perspective is helpful. You may not agree with it, but just trying to understand this. Is this accumulation or distribution? I'm not really sure, but just with that reverse split looming, I think that this is probably 2 months from now, I think the stock price is going to be lower. And so Drew's saying, should have decent guidance with new partnership with Eaton. Very true. Could be going, a lot higher, but that reverse split, regaining compliance really, which I feel like will be achieved, that regain of compliance will be achieved by reverse split. So that's looming. So could be seeing a rally into this green line up to 1. Maybe a good time to hedge then with some puts. And like I said, I'll probably open up a position if that does happen. And I'll share that. I'll make a video on it or mention it. Hydro Hustler, good morning. And good morning to Drew as well. Charge point did just go over it pretty extensively. And so I do see that Hydro Hustler has a request of Tilray. So I'll go over that really quick. But I haven't gone over Tilray in a while. And actually somebody that I would encourage you check out on, let's see, I don't want to search his stuff, on X, I would say the chart guys. The chart guys right here, he has covered the cannabis sector, whether it be in bullish or bearish. I'm not sure. I haven't seen his posts on the cannabis sector recently. So I can provide my perspective on that. So Tilray trading around 40 cents, closed at that level, down 1.65% on the day. I got all this crap drawn up here. It does look like, I remember, I'm actually going to delete this Fibonacci extension. I remember going over this downtrend, break above, but then broke back below. I got out of my position around here, haven't looked back, and I've been happy about it. Over here, it doesn't look so great. We do have volume increasing as price comes down, and then also we have volume increasing as the spread of the candles is decreasing. And so that's divergence. And so what that would be suggesting, I'm not the best at interpreting this, but trying to get better at it. That would suggest to me that there's more volume. So buyers are stepping in, holding this up, those big wicks to the downside. suggests that buyers are holding it up. But if that volume diminishes, if buyers dry up, this could be going lower. We do have, this, let's see, this put in lower lows over here, and then following establishing this low, maybe there's, kind of like a range to be paying attention to. I'll just do a parallel here. So from the low here up to the, I just want to do this horizontal. Sometimes I don't like, I want to make that just a horizontal line. I was saying sometimes I don't generally like Webull that much. I think it's kind of limited as far as charting goes. So, just like with that low, maybe I move that up here, got a retest of it over here, a bounce. We're below that level now. So I think reclaiming 42.10 cents, or maybe, the low over here was 41.38 cents. Need to be reclaiming those levels. Otherwise, this is just not looking that great. And it might just be a continued fade down. I think that stocks trading below $1 right now are just risky because whether it's Trump, tariffs, what's going on in the world, we're just in kind of a volatile market. And, I think that this could continue to fade lower. So good to be cautious with it. So, I'd look for a reclaim of 42 cents. And also let's look at this on the bigger picture. So maybe I'll just remove my drawings. I'm going to switch over to the weekly time frame. So what we can see, price, all-time highs, $300 a share back here in 2018. Then we saw this big rally over here in 2021, around $79 or $80 or so. Actually, the highs in the 60s. But what do we see with the volume? We see that volume has been a lot higher more recently. That actually doesn't look very good because, all of this volume going into it relative to the volume over here, this small amount of volume sent the price up here. As it's been fading down to a low of 37 cents, all of this volume not looking so good. But we can also see that on the weekly, the RSI is below 30, so that is oversold. RSI currently on the weekly is at 25.05. Looking at that on the daily, it is at 36.97. And then thinking about that, we do have a lower low in the stock price, but a higher low, or putting in higher lows in the RSI. So that is bullish divergence. So maybe there's something there. But yeah, generally, I think it's risky. You never know, because it's not only like a drug for recreational purposes that needs to be legalized, but it's also like medicinal, so kind of like a pharmaceutical. So it's got like a number of layers to it that I think kind of complicate it. Maybe that stuff gets passed and this shoots to the moon, but maybe it doesn't. The volume that's been really massive over the past few years suggests to me that it's probably not going up. But maybe there's a big shift change or something. I have no idea. But yeah, anyways, I'm going to end on that note. Hopefully my thoughts were helpful to you. And if you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and good luck trading ChargePoint earnings. Rooting for it to be going up, shooting up to $1 and beyond. But if it does not, have a plan for that. And if it does go up to $1 and seems like there's some resistance, I'll follow up on that. Maybe there's a nice trading hedge to be done in the interim. But yeah, anyways, take care. Have a great hump day trading, and I'll see you tomorrow in pre